this popsicle stand yet? Okay,
right.
let's get into it, and away we go. Welcome, you're listening to The Best of Investing on News Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. Imagine a few guys sitting around a bar having drinks without the drinks, and when you hear who's on the show today, you're going to wish you had drinks.
Yeah.
Exactly. Okay, I'm your host, Edward Brown. I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and welcoming back Jeremy Forcier of GuaranteedRate.com.
Rockstar.
He was a co-host a couple of years ago and kicked them off. No, just kidding.
I took up a banjo career that went south.
Yeah.
I'm happy to be back. Thanks for having me.
I thought that was 6 to 2 years in the
Yeah, that's
jail.
right. Yeah.
Let's not talk about that.
Okay.
Moving right along.
I'm on good behavior.
And finally, we have Rick Warner of Keller Williams Realty. Superstar. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. They only request a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouseforfun.com. You can reach them at 916-777-5511. And since we've got a few brainy guys in here, today's trivia theme is units of measure.
Oh, yeah.
Okay?
Unix?
The 2 Utes.
The 2 Utes, that's right. Our website is bestofinvesting.com. Check us out on Facebook and YouTube, and make sure that you check the like page because you like us.
Links and rods. That's the answer. Links and rods.
Or Lincoln Logs.
Whatever.
Okay. And we're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Rick, we're going to get right in. We're going to tell the truth here. Okay. What is going on? Because you had a very interesting story you were telling us just before we went on.
What's going on where? In real estate, right?
Oh, yeah.
This is the real
not
estate
your
show.
house.
You want to hear about my personal life?
Yeah, your personal life.
What's going on?
No, it's been crazy, and I know that all of us have been experiencing this, but to kind of the degree that I saw here last week, we had an investor client. We made an offer that was just shockingly good. No contingency, no inspection, no appraisal, no nothing. I mean, we made it super, super easy for the seller, went way over the asking price, and not only did we not get it, but the agent sent me a nice email saying, by the way, you were one of 47 offers on this one house.
I mean, what do you think you either could have done, or what do you think it? I mean, you'll find out eventually what it went for, but what do you think the difference?
Yeah, I mean, besides that, because it's an investor, so at some point in their eyes, it's not an emotional thing; it's a money deal.
Sure.
And so somebody maybe emotionally decided, hey,
I want to live there.
I want to pay $9 million.
Yeah.
Yeah.
Yes, exactly.
So are there any markets in the Bay Area that aren't crazy right now in terms of low inventory and multiple offers?
No, I mean, you have to go to the foothills across California. The foothills are still pretty available. Fresno, actually, I think Fresno, the Central Valley is actually pretty hot.
Fresno's hot.
Yeah.
Barstow?
Yeah. I don't know where Barstow is.
That's way down in no man's land.
There you go, and there you have it.
So is this like a temporary glitch? What's driving the fact that we don't seem to have any inventory, and yet there's super high demand, and now we're seeing 2005 like appreciation in prices?
Yeah.
Actually, it almost seems more than 2005.
Well, it's as crazy, but yeah, exactly. You got 2 factors, right? You got one is that the interest rates are just still, well, actually, they've been low for a while, but now they're starting to creep up, and all those people that we kept saying, hey, this is the time, now there's this panic button, right? Oh my gosh, if I don't get in now, I'm going to be stuck with a 4.5% or 5% interest rate, which, by the way, I would love to have on my house, because I'm still stuck at 6 because my house went down in value. But
we can talk after the
I know,
show,
I'm going to work on that.
Well, in fact, Jeremy, why don't you pop right in and say, what is the difference that you're seeing in the interest rates over the last, few weeks?
Well, I mean, as Rick was saying, actually, interest rates have been going up for 3 months. I don't know why the media doesn't talk about that, but they always talk about when they're going lower. They never seem to talk about when they're moving up. So they've been consistently moving up higher and higher and higher for 3 months now, and it's the Fed is looking at inflation and moving forward and trying to get out of buying all these mortgage-backed securities, which has been artificially inflating, or should I say deflating these interest rates.
And how much have they increased?
We're about 0.5% higher right now than we were
Actually, that's
at
a
the end
lot.
of
When you
November.
look at, I mean,
Yeah.
it's one thing if they go from 14 to 14.5%, but when
Right.
they're at 3 and going to 3.5.
Yeah, we went from 3.25. There was like 3 days where you could get 3.25% at no points, and then right now we're right about 3.75%.
That's an outrage.
Yeah, I know, right?
That's
Under
still
4%.
ridiculously low. That's still a
No.
great rate.
Of course, it is. It's tremendously awesome. However, everybody sets their bar based on that low number.
Correct. So people that were approved at 3.25%, trying to stretch themselves to get the most purchase they could, now can't even get that house that they wanted before.
Yeah, but with the economy the way it is, aren't you finding that a lot of people are not trying to just push the envelope, or are they back to the old days of
People always want to push the
Yeah,
envelope.
Well, I mean, there's always going to be those people, but I'll tell you that percentage-wise, I am pleasantly surprised with how many people are saying, you know what, I don't want to put in every single dollar that I can afford. I mean, I have a lot of people who are like, yeah, I'm approved to here, but this is what I'm willing to spend, and I really, it's different. It's different than it was in 2004.
Well, I think that's better for
It's way better,
Yeah,
yeah.
because people with the economy, I mean, they could lose their job tomorrow and then they get another crisis again.
Yeah.
What do you think it's going to take for us to see more inventory
The banks
on the
releasing.
market, so that we don't have this incredible, lack of inventory with 40 people bidding on the same house?
Well, I mean, I think that there's a couple things going on. One is, remember that the regular seller has basically been on the bench for several years, right? Either the value has gone down, or they were told that it's not a seller's market, so they just basically been hunkering down and like, okay, I guess we're not moving. And the word is slow to get out for those people to come back and go, it's okay to come back in, right? So now you have every realtor and their brother saying, hey, we really, really need listings. It is a great time to sell. And so that word is getting out, and so we are having more inventory.
What about undeveloped land? I mean, at some point, you're going to get developers back in to, when the price point.
Well, but housing starts are up. I mean, across the board, nationally, around here in the Bay Area, we don't have a lot of raw land to
Back to
develop.
Barstow again.
Yeah, where is that again? But yeah, so
It's in Mexico, I think.
Yeah, it's across the Mojave Desert.
So I guess at some point, if prices appreciate enough and we start getting back to values that we saw in the early 2000s, what that's likely to do is free up some of these folks that are, have been on the sidelines, that maybe are at or near underwater, and there's really no compelling reason for them to even try to sell. So I guess that's really the good news. If we see enough appreciation in this market, at some point it will, I guess, stabilize.
it picks people up out of that kind of underwater scenario, and then they actually have options that don't include short sale, for example.
But you're right about this crazy market. I mean, I'm making loans at Pacific Private Money. We're hard money lenders, so we're making loans to real estate investors so they can buy, fix, and flip property.
Right.
We just closed a loan. It was a $800,000 purchase loan in San Francisco last week, and the property that the flipper was buying was listed originally at $850,000, and he got the winning contract at $1,130,000,
Wow.
a 33% increase over asking. Now, did it make sense for him to pay that much? Well,
If he sells it for $2 million, it does.
it wouldn't have if he was just going to, remodel the existing building and flip it as is. But he's a guy that happens to, know how to add floors and add square footage, so it made sense for him. But I did have a difficult time finding investors to fund that loan because they were looking up the
risky.
property and going, "Oh, this is 100% financing."
Yeah.
So it's just it is even turning the hard money world upside down because we're having a difficult time assessing whether or not these deals make fundamental sense.
Well, especially if you look at what they previously sold for, and it was just a few years ago, and even if they don't plan to
Or
do
even
too
6
much.
months ago. I mean, that's the
Yeah,
problem we have right
sure.
now, and that's what the problem in Jeremy's world too, is that the appraisers can only go on the data that they have to work with. And so you can't compete in this market with multiple offers without doing some kind of reduction in the appraisal contingency, where you go, look, we'll take the house even if it appraises for $25,000 less than what we've written the contract
Well,
for,
especially
or
if you
removing your appraisal contingency.
Well, and if you can get rid of the financing contingency in that case, you're coming in for all cash or something. It's like, who cares what the appraisal?
Well, and that's why cash is such a big deal. But I'll tell you one thing, just to plug Jeremy real quick. There's an appraisal rotation, but his appraisers are just really phenomenal at working with the environment that we're in, as opposed to just looking for things to be wrong. So that's been really fantastic.
Yeah,
And that's
I want to get
important.
into that with you at some point on the show, because if you go to a regular bank, there's who knows what appraiser you're going to get.
Some guy from exactly.
And so
National companies are very difficult to work with.
Yeah, so
Absolutely.
let's definitely get into that. We're going to cut to our first commercial break. We're in the studio here with lots of guys here. We got Mark Hoff of Pacific Private Money, Jeremy Forcier of Guaranteed Rate, and who are you? Oh yes, Rick Williams of
Rick Williams.
That's awesome.
Rick
Rick
Williams.
Berry.
How about
Rick Berry's in the
Rick
studio.
Berry,
folks.
yeah.
Rick Berry.
Rick Warner, come on, guys, stop teasing me. Okay, here's the first commercial break. Here's
No
the
more
first.
Christmas cards for you.
Yeah. Here's the first trivia question. This unit of measure is 40. Now you guys can't answer until after the.
Yeah.
Okay. This unit of measure is 43,560 square feet. What is it? And it's not my house. I wish it was. Okay. The first three callers. Remember, we are recording for television. Stop doing that. The first three callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. We're having too much fun here. Okay, call 888-912-1190. That's 888-912-1190 to answer this question. This unit of, I gotta close my eyes. You guys are cracking me up. This unit of measure is 43,560 square feet. What is it? 888-912-1190.
I've got a unit.
This is the first time this has ever happened to me. You guys, I can't have you all on at the same time. Make sure to include your name and
This
your
is
email
what it makes
address.
the ratings much better,
That's
though.
true,
It's
yes.
Good stuff.
Make sure to include your name, your email address, and speak slowly, and please spell out your email for us one letter at a time, and we'll be right back, hopefully.
I got a unit for you.
I don't think that came through. I'm looking. You
But
can't.
you know what's awesome?
You can't see that.
Once I figured out that it was recording from there.
I know. Oh, good stuff. Here I was thinking I was being quiet.
I thought it was so funny. I was like, as soon as it did, I was like,
Is there water back there?
Yeah.
It's a good thing Kramer's not here.
Good. That was a good session.
oh, sorry.
Let's do the next one naked.
Actually, that would be hilarious if we did.
We just sat down.
We sat down all in our underwear.
Yeah.
All came with the scotch.
Yeah.
And then I could send that one
that's
to
great.
the Comcast.
Yeah.
That's right. Yeah. Dude, you broke down and got cups. Awesome.
Yeah.
No, first time.
That's
You
right.
bastard.
Come on, Eddie.
I had those there for
Oh, I love
months.
you, Rick.
Ah, good time.
It makes
This is
me
what we-
cry.
Good stuff. This is what we talked about.
Oh, that was too funny.
Do you guys actually listen to this show?
I do. More often
I'll
than not.
catch
I'm always taking a nap at this time of day.
I mean, if I catch it, I do.
Yeah.
You know.
I caught last week's, and there was like 4 or 5 weeks in a row. I just happened to oh yeah, it's almost one.
Yeah.
Does anybody watch that? Is there anybody out there watching this?
It's not
Well, it's
live.
not live.
That? No. But you
Yes.
post
I
it.
post it.
On
Yeah.
YouTube. We can start posting them more
Yeah.
on our Facebook pages and stuff.
Yeah, we have one like.
Was it you?
It's you.
I keep hitting it.
Oh, Eva,
Still
honey.
only one.
Yeah, exactly.
Like the page.
Yeah, I like it.
It's great.
Like the damn page.
We're killing it.
You know what? I love Ken Lyons. I think it's so funny when we were doing KNBR a couple of times. Saturday morning.
Mhm.
It's not as popular as
Right.
drive time 5 p.m. Right? Sometimes I hear him, and I don't think he was really catching himself. But come on, people, call the show with a question.
Oh, it sounds like
Who,
I'm thinking,
do I know?
don't do that.
he's I think
That's how I met Jeremy.
had to have met him before. He's a money manager out in Nevada. I've known him for
He
ever.
was at the
Yeah,
party.
he's a great guy.
He is great. That one part that would just pour me up when you said that.
I would imagine
One of the
you got to go
greatest
into a
guys
show
I've
like
ever
that
met in my
prepared to
life.
not get any calls, right? I mean,
Wait a second.
you got to go in with the game plan of no calls, and then if you get one, great, you can roll with it. But
That's what we were doing when we were doing it live, and every now and again we get a call, and
One time I got 3
Like,
calls, they were all
what's
hanging on.
what's that noise?
although one time we had this one guy, I don't remember exactly what he said, but it was just like, sometimes you get a call and they're like the worst call.
Well, that's right, and I know, and I listen for that. And so,
But you know how, I mean, it's easy to wrap those people up too.
Yeah.
Hey, thanks
You go,
for
hey,
calling.
thanks for calling, and then you answer
take
the question.
Wait,
Yeah.
But you answer a question you want to answer.
Yeah.
did we lose you?
Yeah.
Well, it's funny because we had the one time I had a guest on, and she knew her stuff, but oh my gosh, she was so boring with the attorney that it's like I realized,
so
crap. So I just
I
had
got
to
a whole
kind
section.
of keep throwing things in there, and I learned that was early on. Okay.
Attorneysinbikinis.com.
Yeah, there you go. That'll work.
That's hot.
Okay. Let's see. Let's get into. I'd like to ask you about the appraisal.
Well, the appraisal's important, and I've got some.
Okay.
I've got
Let's
similar
get
stories.
into that.
I got
Because
stories too.
we
Yeah, good.
We can get into email. Okay.
That's good.
See if we can get 5 seconds.
Mm-hmm.
Ready. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with, or who are you? You are my famous co-host, Mark Hoff of Pacific Private Money, Jeremy Forcier of GuaranteedRate.com, and Rick Warner of Keller Williams Realty. And when we cut to the first commercial break, after laughing so hard from the last segment, we asked this trivia question. This unit of measure is 43,560 square feet. What is it? Rick, you know the answer to this one.
It's a Quaker.
It's a Quaker, yes, an acre. That is correct. Okay, now, just before we cut to break, I had been asking Jeremy about the appraisal process because when you deal with a regular big bank with all of the rules that they have with the federal regulations, you can't just choose your own appraiser. But I mean, it's just kind of thrown out into into a board basically where they just bid on it, right?
Yeah, well, I mean, we're all regulated by the same appraisal requirements.
Okay.
So what that really means is that you have to use a third-party vendor to order an appraisal. Now, where all of the larger banks, I won't name any names, B of A, but they have to use certain,
Bank.
they use these gigantic national companies,
Like property services.
like LSI appraisal, these different companies, yeah. And there's something wrong with that. The problem though that we see is that most of the work goes to the lowest bidder. So those big companies are in it for a big profit. So you're going to get someone who is in Willits, let's say that they're going to do an appraisal in Petaluma or San Rafael, and they're only going to charge $250.
Well, you're lucky if it's that. Sometimes they're out of Texas
Oh,
and
gosh.
trying to do a local appraisal.
Not quite that bad.
But it
That
used to
was
be.
almost funny, buddy.
I
Yeah,
mean,
that doesn't
commercial-
happen.
Texas would be a real big
No,
commitment.
commercial they've done that.
Oh, commercial.
Yeah.
Oh, okay.
Almost funny. All right. Continue on. I'm listening.
He's the host. You can't
Yeah,
say
you
that.
can't say that.
Hey, we're having fun.
We are having
Gosh,
fun.
this is a safe place. It's like therapy.
It was almost funny. He's right. That's
See,
true.
thank you.
Remember, I control the board here. I can just turn you off at any time, buddy.
So I'm actually not being cut out right now, so
No.
you can hear me out there. But so long story short is that we have an appraisal management company. It's 100% local. It's fantastic. They only use appraisers that are within 5 miles of the property. So
That's
they,
sweet.
yeah, no, it's
Yeah.
awesome.
Yeah,
So
you
we
bet.
get a great reflection of true value. They understand markets. They understand sub-markets within a market, different neighborhoods, and make the appropriate adjustments. And they're also just a lot easier to work with from a compliance standpoint as well. So we have a whole concierge desk. The appraisal people, they communicate with the actual appraisers. Rick, you've worked with a number of appraisers that we've had. What do you think about it?
Well, it's great. I mean, because you don't want to have, or they won't let you have. You as the lender can't have any contact with them, but I can go in and at least give them comps and have a conversation of, hey, look, this is what I think, and this is what I think is relevant to this property, for example, stuff that they may not, and they're open to listening to that, and that's huge because a lot lot of them are.
As you slip them a $5
No.
Starbucks card.
Now
Just
that was
kidding.
funny.
Okay.
Way to go. Good comeback.
And let's remind our listeners why this is important, because it's in this market where we are right now, we're an appreciating market, and we've got multiple offers that are bidding up the price, and yet it still makes sense. You've got a willing buyer, you've got a willing seller, the price makes sense still in light of the market. But now you've got a challenge where if the property doesn't appraise at the contract price, the whole thing can fall apart. And I know you've got real world examples of it. You know, I, as a hard money lender who are making loans to guys who are flipping, they get their property into contract and they get this great price, and it falls out of contract, not once, not twice, sometimes 3 times, because they're not getting the appraisal. And so what we're talking about here's an opportunity for a home buyer to avoid that situation by using someone like Jeremy, who is a local proven mortgage loan originator, as opposed to going to the banks where it might be like, you know, flipping a coin as to whether or not you're actually going to get the transaction through.
Yeah, there's actually 2 parts of that. So it's first using a great lender, a local lender like Jeremy. It's also then having your agent or your broker go meet the appraiser, take the time, take the lockbox off the house, don't let them get in there unless they meet with you. Do your homework, bring the stuff that's relevant to that property, and talk to them intelligently about why the value is there. And it's both things. You can't if you just let it go to the wind, they're gonna do whatever they want.
And then trying to get them to undo things is probably
forget about it. Yeah, it's really
possible.
brutal. Yeah.
No, absolutely, and nothing's more frustrating than watching your profits, if you're a real estate flipper, get flushed down the toilet while you're paying interest on your hard money loan. My investors like it, but I know I want to repeat business. I want them to keep flipping houses and coming back to me for more loans. So it really is an issue right now, and it's scary.
Well, and the other thing is, if you're on the selling side of that, because you're affected by that as well when your guy flips the property, is to do the same thing. You either you want to ask the people buying it, hey, we want you to remove your appraisal contingency, or we want you to give a $25 or $50 or $100,000 buffer in there or something, so that you take as many parts of this appraisal issue off the table before it even gets off the ground.
You're a pretty smart guy. You should have your license.
That's a good idea. Maybe I'll do that.
So going back to the lack of inventory and multiple offers, are there any tips we can offer listeners as to how to best get the property you're targeting?
Well, there's a lot of things actually, and I think that in fact we should do a whole video just on that. A couple things just off the top of my head. One is you should try and create a relationship with both. If I'm representing a buyer, for example, the very first thing I want to do is, do I know the agent, right? And what's their history? What's their reputation? If I've already got a relationship with them, I want to definitely enhance that. Hey, how's it going? What's going on? What are your, what's important to you? If I don't know them, I want to create some kind of relationship as quickly as I can. Talk about who I am as an agent, why I get things done. Here's all the deals I've done before. Check with any of these agents. I want to prime them up so that they know that once they ultimately choose my client, that they're dealing with somebody who knows what they're doing, right? And obviously any agent could do that. The other thing is to find out, what do the sellers really want? We don't want to assume we know what the seller. Of course, they want the most money, but there's so many other factors in a contract that gets written. How, what kind of contingencies are important to them? Do they need a rent back? What's their circumstances? Why are they moving? All these things, so that you can write an offer that's tailored to exactly what they want. And then one of the things that I'm doing here more recently is to go in and present the offer live to the seller and talk about who my buyer is and why they're important and why they're special. And not only that, but look, we're going to blow you away with this offer. We've taken every single one of the things that you want in an offer. We've wrapped it all in one. So you don't have to do any counter offer.
Sometimes you have to write a letter.
What Rick is saying, and I can't say enough about Rick as a realtor as well, is that it's the time to work with a true professional again. Okay, so back in 2005 when things were crazy, you didn't really, no offense, but people didn't value realtors that way at that time. They were just like, who can get me into contract? And a lot of people still think like that. They think going to the listing agent, writing the contract, that's going to give them a better chance. But right now, working with a professional, a really good realtor like Rick, who has a great reputation, that's going to take you a long way, that's going above and beyond to ask the right questions, that's going to get you the best chance of getting the house
especially when you get 47 backup offers, or additional offers on it. It'd be really important to figure out how to get yours accepted.
Yeah.
Okay, guys, we're going to cut to another quick commercial break here. When we come back, we're going to get into email time. And let's see here. We got another special little trivia contest here where the winner is going to receive a 2-night stay at the Napa Valley Lodge. Located in the heart of the Napa Valley in the charming town of Yountville, the Napa Valley Lodge is just steps away from the world-renowned restaurants, specialty shops, and award-winning wine tasting rooms. The Lodge welcomes you with a friendly and experienced staff that are committed to making your stay as special as possible. Their guest rooms feature private verandas, Many with courtyard, garden, or vineyard views, vaulted ceilings, and fireplaces. Hotel amenities include complimentary champagne continental breakfast buffet, which I wish we had right now, swimming pool, whirlpool spa, bocce ball court, poolside fire pit, spa treatment room, and fitness room. The NapaValleyLodge.com. And here is the special trivia contest question. 1 out of 7 of us use this as an excuse for taking the day off from work. What was that excuse? And here are the rules. No previous winners of any prizes on the Best of Investing. You need to email Edward at bestofinvesting.com the answer by midnight tonight, and next week, or actually 2 weeks, we are going to announce the winner. Now, here is the second commercial trivia question. This is the equivalent of 4 pecks or 8 gallons. What is it? Now, we're talking about units of measure. I see a couple blank stares here. Okay, the first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. This is the equivalent of 4 pecks or 8 gallons. What is it? Call 888-912-1190. Make sure to include your name, email address, and please remember to speak slowly and spell out your email for us 1 letter at a time. And we'll be right back.
Indeed.
Yes? Answer?
No idea.
Was there 2 different ones
4
there? I was
packs.
confused
Yeah,
as
I
to
did
what
too.
the
What
offering
was
was.
the second? What was
Was there
seven?
2
What was
questions?
the first
Yeah,
question?
well, one's a special trivia contest for the
Got
Napa Valley Lodge.
Oh,
and then
that
this
was the
question
what,
is
1
for-
in
See
7
how
days?
dumb I am. I'm all,
Golf?
what are we doing? What are we asking again?
Is the answer golf? For the,
I can't say anything.
Oh.
Wait till next week.
oh, they're not even.
Remember, because people are going to email the answer to me on that.
Oh, I got you.
Yeah.
Okay.
1 out of 7.
So that one you don't say the answer to.
Correct. Not until next week.
By the way, Napa Valley Lodge, amazing taco truck, like
Oh, well, here, mention that when we
like
get back.
10 yards away from it.
They may not want you to mention that since it's.
But no,
not
I can tie
part
in
of the
I always wonder if it's
right across the
Yountville or
street is it?
Yountville.
Yeah. Yeah.
I've stayed there. It's nice.
Oh, you can add that part.
So what are the other questions too? You told me mine. I'm wondering if I want to flip to maybe a more real estate related question.
Sorry,
but
Sucker.
you know, the title insurance one. Did you have ones for these
Yes,
guys too?
I absolutely do.
And what are they? I'm just curious.
Okay.
I'll let you.
Mine was. I forgot what mine
Is
is.
think about buying a short sale property. Any advice you can offer?
Oh,
me?
right. Yeah.
And
Don't
for
do it.
Jeremy is I'm thinking of refinancing, but I'm not sure now is the best time. Should I wait? I currently have a loan at 5.5%.
Should I
Nice
wait?
ain't a little bit.
Should I wait? My God.
Are we well? Are interest rates going to go down? Mm-hmm. No, maybe yes, maybe no.
Oh, it's possible, but
Who'd have thunk it?
doesn't look like the
I
events
don't
are
see how
lining
that
up.
happened.
Yeah, right.
Well, if the stock market gets crashed,
Yeah.
you know
Gets
what I mean?
crashed?
Stock market goes down
Yeah.
2,000, 2,500 points.
if someone crashes
We'll flood
into
back
the stock
into it.
market,
The government will flood back.
Right. Good?
Yeah.
Okay. So I figured, with yours, that's a good question.
yeah, no,
But,
that works. That
that'll
works.
work.
That will work.
All right. You guys ready? Sure. All right, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Honk, Jeremy Forcier, and Rick Warner. When we cut to the second commercial break, we asked this trivia question. This is the equivalent of 4 pecks or 8 gallons. What is it? What unit of measure?
No idea.
A bushel. Remember a bushel and
Oh.
a peck? That sort of thing. Anyone here even use bushels anymore?
I was born in the 80s.
Yeah, there you go. 8.
If you were not born in the
I know, I lied. 79. I almost made the 80 cut by 6 weeks.
Yeah, you're still a child.
I have a son that was almost born in the same
Yeah.
decade.
Okay, we're going to get right into email time here. We're going to go down the list. Mark, the email we received for you is, do you always require title insurance when funding a loan? I want to explain what that means.
Well, absolutely is the answer. And so even though we're originating what's called hard money loans, most of the safety and security features built into a hard money loan are the same as if it's a bank loan. There really isn't a lot of difference between the protections that the lender has on a bank loan versus a hard money loan. We use a promissory note, we use a deed of trust, we have a number of disclosures, we have some other supporting documents, and the lender, the private individual who funds our loans to real estate investors that we make through the company, they enjoy protections such as a lender's policy of title insurance that insures the amount of their loan, the amount of the loan that they're funding, as well as the lien position, which more often than not in this market is a first lien position. So yes, on title insurance, there's also hazard insurance, and so the hazard insurance exists to be able to compensate the lender for the loss in value if property burns down.
And do you get Alta and CLTA?
Well, that's an interesting question because the title companies, the last couple of years, the title companies have gotten very, very tough on issuing title policies, and we used to always, without question, be able to get an Alta policy, but there's a lot of saber rattling in the industry around, with private beneficiaries, and particularly if the note is fractionalized, which I won't get into detail as to what that means today, but they're starting to pull back a little bit in offering CLTA policies as opposed to Alta policies, and the nuances of those are fairly detailed and complicated, but the answer is, oftentimes we do get Altas, but sometimes we get a CLTA, and that doesn't mean it's bad or necessarily inferior. It's just basically the title company is saying we're not going to insure everything under the kitchen sink. We're going to actually have some certain reservations.
But the main issue is that you do get title insurance.
Well, we're aware of
your clients are protected.
Absolutely, and we're aware of those nuances between, for example, a CLTA and an ALTA, and so the bottom line is that we're in the business of originating loans that have safety and security features that our investors, our lenders, our private lenders can rely upon so that they can feel that they can make these investments with their savings or IRA monies and earn that fabulous yield, which is averaging 8 to 9% fixed right now on these short-term loans, and yet feel like they're, this is not a, quote, risky endeavor.
Isn't that amazing, guys? It's still paying 8 to 9% on those kind of loans. It's great.
Good. Yeah.
Okay, Jeremy. By the way, let
sure.
people know how to get a hold of you.
For more information about our company and the types of investments we offer, it's pacificprivatemoney.com. Of course, all one word, pacificprivatemoney.com. Or you can call us, 415-883-2150. That's 415-883-2150. If you call today, we won't be answering the phones, but please leave a message.
Okay. And Jeremy, question we received that was directed at Best of Investing, but you're absolutely the right guy to answer this one. I'm thinking of refinancing, but I'm not sure now is the best time. Should I wait? I guess he's thinking interest rates might go down. I currently have a loan at 5.5%.
Well, it may or may not make sense is the answer. It always makes sense to talk to a mortgage professional and check it out. As far as interest rates go, they're extremely low. No matter what your interest rate is, you absolutely should talk to someone right now, preferably Jeremy Forcier, guaranteed rate mortgage.
Well, I saw an email blast from you that was, I couldn't believe how low the interest rates that you were quoting.
Yeah, interest rates on a 15-year fixed mortgage, you can still get under 3% right now. 30-year fixed rates are under 4% still. So absolutely you should take a look. But there's more than just the factor of your rate that comes into play when you're looking at a refinance. So, if your loan was at, 5.5%, but you have 2 years left on the loan, and your goal is to pay off this home loan, I tell you absolutely not. Don't refinance. Keep what you got. It doesn't make any sense to start over. It just doesn't make any sense. But for most people, if you have taken out a loan in the last 5 years to 10 years and your rate is above 4%, you absolutely should talk to someone.
And there's an honest guy tells you potentially, takes money out of his own pocket to say that you may not need a new loan. Appreciate that. Jeremy, how do people get a hold of you if they want an honest broker?
If you you want an honest broker, you can call my office. No, you can
Talk to
reach.
Danielle or
Yeah,
Simone.
you can talk to one of my staff. I'm the attorney of the group. I'm sorry. So no, you can contact me at area code 415-717-7155. That's 415-717-7155. I have offices in Marin County, Sonoma County, as well as San Ramon, and we'd love to meet you.
Yeah,
You get around.
yeah, really. You can always go to Best of Investing too, and we'll always put you in touch with Jeremy there. And
Actually,
Rick.
on Jeremy too, because I've had a lot of experience with him, and I do send all my clients to him. He is shockingly honest, and it's really refreshing, and you kind of just expect it, but apparently a lot of people aren't that way. But he will tell people, no, you shouldn't do this right now, or no, I can't get you a loan, instead of just hoping that he can. So
So in this case, you can judge a book by its cover because he looks like he's on an honest face. Okay.
He doesn't look that
Wow.
honest.
I'll give you $50 later, Rick.
Okay.
I'll give you an opinion of his face real quick.
Yeah.
If you want me to be honest.
Don't we have a commercial coming up?
Okay, Rick, we got an email here. It says, I'm thinking about buying a short sale property. Any advice you can offer me?
Well, I think that short sales are absolutely one of the best purchases that you can make. The question is, are there things that would get in your way of doing that may make it not a good idea? For example, do you have a certain time frame that you have to make a purchase? Short sales can take 3 to 6 months to get done. Are you willing to take the risk that you'll get into contract, maybe pass up some other properties while you're waiting for this bank approval on a short sale, and then have it ultimately not come through, or have the bank come back and go, hey, we want more money than what you suggested? But on the surface, buying a short sale, I think, is where the best opportunity is. There's the least amount of people watching the actual price, and it's where the best deals can be had. And in an environment where real estate is going up, you could end up purchasing a property where you get into contract in what month are we in February of 2013. It doesn't close until October of 2013. Meanwhile, the market's gone up 11%, and by the time you close on it, you've already locked in an 11 or 12% gain. That's pretty amazing. So.
And are they still taking 3 to 6 months generally?
Yeah.
Okay.
And I couldn't agree with Rick more on what he's saying. I mean, we just had a property that closed in Napa last week that has been in contract for 8 months, but the appraisal came in $160,000 over the contract price.
And because
That's amazing.
And because they're already in contract, the bank can't.
Correct. It's an
Well,
approved short
the
sale.
bank could, just so you know. I mean, they
Okay.
can change depending on how long. They can say that their own BPOs expired. There's a lot of things that can go wrong with that, but generally no. And so it is a great. And by the way, those are also the very same sales that are screwing up our appraisals, because they look at a house that closed, last month, but it was actually got into contract 9 months ago based on those prices, and the appraiser's going, well, but again, it goes back to why it's important to go to the appraiser and say, hey, by the way, this went into contract 9 months ago, so you know that that's not an actual good price.
Wow, Rick. Oh, mighty Rick. You just dropped some knowledge, buddy.
And you use the initials BPO, that broker opinion?
Broker price opinion, yeah, very good. Thank you for clearing that up.
Okay, and Rick, how do people get a hold of you? Because again, this honest face thing is kind of going around the room here.
Well, best way to reach me is on my phone, 415-302-6348. And I am at the office, so if you do call right now, I will be there to answer. And I do serve Marin and Southern Sonoma County. So.
But no, not Barstow.
Where's Barstow?
You keep asking.
Mexico.
Bueller?
Bueller, yeah, Bueller. No, Barstow, isn't that on the way from between
I think
Los
it's
Angeles and Vegas?
Bakersfield somewhere,
Yeah,
right?
it's out in the north.
Let's be nice. We could have
Who ordered a
audience
pizza?
listening out there.
That's true.
That'd be me, dude.
Okay. All right, third and final commercial break trivia question. Again, we're talking about units of measure. This unit of this is going to be a tough one, as though the bushel one wasn't. Okay, this unit of measure is the equivalent of 10,000 square meters. What is it?
That's easy.
Really? Okay. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. This unit of measure is the equivalent of 10,000 square meters. What is it called? Make sure to include your name, your email address, spell out your email for us 1 letter at a time. Don't touch that dial, because when we come back, I've got an interesting article here about San Bernardino picking someone to be the city manager who filed bankruptcy not once, but twice. All right, we will be right back.
Are we being too goofy for you, Edward?
You know what? It makes for good radio.
Good.
That's all I
I
care
can't
about.
wait to hear it.
So that,
Anyone know the answer to the question?
I don't.
1 square mile.
is that deximeter?
What?
Decameter? Deximeter?
You're just trying to do simple math. Come on.
yeah, decameter.
You got to come up with something more creative than that.
Yeah. A decometer.
What's the answer? You're not going to tell us?
No, this one I'll tell you when we come back. Okay, now I've got this article, which is kind of interesting, but that's not going to take all that time. So is there anything going on economy-wise you guys want to cover?
Well,
Isn't this the part where you guys bash Obama?
No, we don't bash Obama.
We try to not keep it
We've
political.
actually, I don't think we've ever bashed him. We bashed
Never
Nancy Pelosi a while back,
Yeah,
but
that's true.
that's been a while since we bashed.
What's your article?
This one here about
The
the
guy.
bankrupt. Yeah.
I mean, I personally feel that a lot of this good news and whatnot is really smoke and mirrors, but that's just
Okay,
my
good.
personal
Let's
opinion.
let's.
I mean,
That's
you know
actually
what?
really good.
That's good.
I mean, I think if you look at the spread right now in the history of the S&P 500 interest rates and how they kind of move together a little bit,
Yeah.
right now the gap is like this. So what does that mean?
One of them has to move.
One of them has to collapse on the other, and,
Right.
and
So
I don't know what
interest rates
that.
are going up.
They're
or the
either going to
market's
go
coming
up
down.
or the S&P is going to
Yeah.
get slammed, and I don't know which is which.
We can talk about that because my thing is that to tie in with that, whether it's smoke and mirrors or not. I mean, the idea that the Fed was buying down, that was supposed to be a bridge to a
Yes.
real good economy.
Right.
The question is the bridge going to make it to the other side of the cliff?
Yeah.
Right.
Yeah. Right.
That's what I.
Jobless claims up yesterday, released from last month, revised. Unemployment not getting better, 3 months in a row. I don't know. I just don't see. You can't have a jobless recovery.
Correct. That's exactly right.
You know?
So the
And
bridge,
so-
yeah, and every month that happens, the cliff gets further away.
We got 9 minutes to go.
Okay.
Talking too much.
No, it's good.
9 minutes.
I am having a good hair day. I keep looking at it in the mirror.
Yeah.
I'm having a no
Well,
hair
you know
day.
why? You know why I put? Yeah. I know. I feel that thing. You know why I put that?
I'm
up
growing my
there?
forehead.
Because I had a couple of guys here who could not figure out that you have to pivot, and they kept doing this
Right.
all the time, and so.
I've caught
Oh,
myself
they can
twice.
look
doing
Just couple, yeah, because you can hear
Oh,
yourself,
yeah,
right?
yeah.
So I figured, okay, if you want to talk to him,
I
just
like
if you look
that.
in the mirror, you can see him. But it's still kind of hard.
But now I forgot that it's even there.
I'm going to
I didn't
start
look at
talking to you fuckers. Oh, you guys that way. Sorry.
You can't say that.
Can you beep that out, please?
Yeah.
Sorry.
Not really.
Done.
Okay, guys, ready?
I will be back next month.
Yeah.
Your sponsorship has been revoked.
Yeah.
Oh, wouldn't be the first time.
Been thrown out of there.
86th
Oh wait, did
from
I-
9:10.
Did you say you're an attorney?
No.
For some reason, when I thought.
Attorneys always lie.
Okay, there we go. So I didn't think you were, but for some reason I
I
thought
think
I
that's
caught
very
that.
nice to make that kind of generalization.
Wait, I'm sorry. I gotta tell us what.
Is he bashing Obama again?
It's, yeah.
That's what it sounds like to me.
This guy goes into the bar and he says, "Oh, attorneys are assholes." This guy at the end of the bar goes, "Hey," he goes, "You an attorney?" He goes, "No, I'm an asshole."
That's a good one.
All right, here we go, boys and girls. Boys.
I'm not a.
Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, Jeremy Forcier, and Rick Warner. And when we cut to the third and final commercial break, we ask this trivia question. This unit of measure is the equivalent of 10,000 square meters. What is it called? Anybody? Hectare.
Oh,
Or a hectare. No, it's a hectare.
I
It's
know.
something called.
yes,
Okay.
that's right, Hector.
Okay, I'm going to go quickly through this story, and then Jeremy, we want to get into economic stuff because you got some interesting stuff here. But okay, the bankrupt city of San Bernardino has hired a new city manager who, according to court filings, has filed not once but twice declared bankruptcy. Now, that's the kind of guy I want running my city.
Is that
Well,
like
that
out of empathy or what?
Well,
That makes sense. I mean, why not hire the guy that's really good at doing bankruptcy?
Yeah, exactly. And he was recently ousted from the
Great
board of a small community's water company after being sued by shareholders. But he's only getting paid $222,000 a year for this. Okay, and now the first one was done in 1991. The second was 2011. And the interesting thing here is that the council interviewed 2 final candidates, but voted unanimously to hire this guy. I'm wondering, was the other one Al Capone? I mean, come on, what's going on with that?
Hey, Al Capone could. I mean,
He probably
pretty solid leader. He's dead.
Oh, that's true. You can't hire him back. Okay, Jeremy, some
He
economic
can only
stuff.
vote.
Yeah, really. Give him a driver's license. What's going on economy-wise? Because you were.
Well, I am no
smoking
economist, but you know, I've definitely been following the market, and I'll tell you what, I am concerned about the market right now in general. And when I talk about the market, I'm talking about the relationship between interest rates and the stock market, and all the news that's coming out about people's confidence getting higher and higher. So that pushing the Dow up and up, pushing the S&P 500
That's usually
up
a
and up.
dangerous thing, isn't it?
Well, I mean, there's always has to be some type of retracement in any rally, whether it's interest rates. So, for example, everyone's freaking out that these rates are going up. You can't go in one direction forever. So you can't go down, forever. You have to have a retracement of that, even if it's going to go lower again. It has to have a retracement. It just doesn't move that way. And right now, the gap between the S&P 500 and the mortgage interest rates, and over time, over history, they move together, okay, in some form of pattern and relationship. The gap right now is gigantic. So what does that really mean?
Something's going to move. Well,
It means that one has, well, if history will repeat itself
Right.
as it usually, and it's that if, right? Is this going to be the one time where we change exactly how everything we've ever tracked, it's going to be different this time? Well, if the past is any indication, that gap has to close. And that either means interest rates are really going to move up quickly, or we're going to have some type of retractment in the stock market.
And you guys are seeing a lot of for lease signs on commercial and IM, aren't you?
Lots.
Yeah, so it's not like the economy has suddenly just turned around.
I would disagree with that, but that might be a microcosm, so I'm not going to necessarily. But I mean, like for example, in Petaluma, we had a huge vacancy rate in the office space, and they've gone up, like 50% occupancy has gone up. So I mean, it has been actually pretty good looking recovery in that little area.
But see, that maybe in that area,
Right, correct.
Yeah, because you're still across the ports. And
Well,
also, the weather has been really bad back east, and so that affects a lot of the economy too.
Getting back to the interest rates, we've all been in this room here. We've been following the real estate market for decades, 30 years for me, and probably 20 for you, Rick. And 5% was a killer rate not that long ago, and now we're talking about rates still below 4, and we're crying that interest rates are starting to inch up a little bit. What do you expect? I mean, the prime rate, if you go back 30 years, is averaged 6%, which meant mortgage rates of oftentimes 7 or 8%. So,
Right. Well,
keeping some perspective here, historically, we simply cannot expect interest rates to remain anywhere
And the
near
price
where
of
they
real
are now.
estate, how is that compared to what year would we be in with the price of real estate right now?
2001.
Okay.
But the thing is that going back actually 30 years, and to your point about how things don't kind of always go one direction, the reality is in 1981, if you bought a house, you're going to pay 16, 17% interest, right?
Yeah.
So essentially, for 30 years, with some pullbacks, it's been going down.
Yes.
And so the question is, okay, so we're kind of like, you can't go any further than now. Of course, we thought that at 5%, and then at 4.5%, and then at 4%. But at some point, it
can't go
cannot go
negative.
any lower, right? I mean, unless we want to all be in Japan. I think where they had negative, like they actually paid for
And I'm glad you said that, because that is a fear of mine.
yeah,
Deflation is much worse than inflation.
Okay, so that's one scenario, but the other scenario is that we have, as long as we've all been, 30 years, it's basically been trending down. So is there a 30-year cycle? I mean, the last time it was super low was like in the 50s. It never got to 3.5%, but it was like 5%, right? So are we going to, that means from the 50s to the 80s, it basically trended up.
Yeah, but I think a lot of it has to do with the jobs and how much people earn, right?
It absolutely does. I mean, there's a lot of
earning
factors,
levels,
but I mean,
housing affordability, all of those are metrics for the.
they all work together, absolutely. But the thing is that if things are kind of that cyclical, and where we have the interest rate environment, it's this like super slow, because remember, several presidencies, tons of different ideas on economics and everything else, but at the end of the day, basically, it went up very slowly for 30 years and then down very slowly for 30 years. So,
but politically, are we suddenly going into socialism that we didn't really have before?
Ridiculous. It's no different than we have
Come
before.
on, comrade.
Look,
I'm in my submarine.
Yeah, it's so funny. I mean, all my conservative friends think I'm a liberal, and all my liberal friends think I'm a conservative. I think you guys are all full of crap. But anyway,
you mean you're not a Democrat or a Republican? I'm American Independent.
So what's the moral?
Well then.
Well,
Rick is looking
It's
good.
your point. It's your point.
So anyway, the thing is that what we have right now is, the Fed is buying down, or they're buying the bonds to keep the rates low. Bernanke said he was going to do that. Of course, as soon as he said he was going to keep it low through 2014, they started to go up. But the point is that is a bridge. That is not actual economic turnaround, right? It's something to hope, to kind of create a bridge to where we actually have real economic results, which is actual jobs,
Right.
and unemployment going down, and not just crappy jobs, but jobs where people are actually making some money. And to me, the verdict is not out. It absolutely could work, by the way. I know you guys don't think it will, but I think it can. But, but it may not. We don't know.
Yeah, I mean, can government spend their way out of this?
See, there he goes.
Well,
I just heard that
I'm
somewhere.
with
I read it on
that.
Oprah. I don't know.
Bottom line is we really don't know, and there's certainly cause for concern. But taking a 30-year perspective, I don't remember ever being a time when there wasn't doubt about the economy.
Right.
You look
Exactly.
back and you go,
Doesn't
oh, the
matter
Reagan
what-
years were
yeah,
great, or
no
you
matter
look
how
back
many-
and the Clinton years
Right.
were great. But
Yeah, but when Reagan was in, there was a big hurt on real estate because of
Absolutely.
the tax,
Right.
the passive and active.
so it always looks great in hindsight.
Right.
Looking ahead or being in it, there's always a lot of doubt. So I'm optimistic.
Yeah.
Personally.
So
Me too.
what Mark just said is buy now, buy frequently, use all the different types of loans that are available out there, and everything's going to be okay eventually.
Okay.
Hard,
I
soft,
love Mark. He's such an optimist.
I do tend to agree, though, with Mark. I'm optimistic as
Yeah,
well.
me too.
Okay, guys, we're going to have to cut off. This has been a very fun show. Thoughts for the day. And Zig Ziglar says, people often say that motivation doesn't last. Well, neither does bathing. That's why we recommend it daily. And my wife saw a couple of good-looking guys on the beach the other day and made the comment that they look like Chippendale. So, of course, me, I take off my shirt. She says, put it back on. You look like Chips Ahoy. That hurt. Okay. Tune in next week to the Best of Investing. Actually, 2 weeks from now, to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.